The country saw a slowdown in inflation to start off the year. President Duterte's economic managers are now optimistic that the government will soon meet its inflation target range of 2 to 4%. Bim Santos with the report.
Edgar clearly remembers a time last year when oil prices went up week after week, cutting his earnings by as much as 300 pesos a day. Now, with more stable gas and commodity prices, things are looking up.
Itong December hanggang ngayon, magandang maluwag ang lalo na sa gas, mababa ang per liter.
Inflation continued to ease and dropped to a 10-month low of 4.4% in January, the lowest since the 4.5% in April 2018. According to the Philippine Statistics Authority, the three commodity groups that pulled down January inflation were food and non-alcoholic beverages, alcoholic beverages and tobacco, and transportation. Though inflation has gone down from the 9-year high peak of 6.7% last September, the January rate still remains outside the 2 to 4% target range of the Bangko Sentral ng Pilipinas. The PSA also noted that the month-on-month inflation rate went up by 0.1% from the negative rate last December, suggesting latent price pressures.
This means that we should continue to be vigilant. The government needs to continue the good interventions it is doing to control the prices.
The BSP, however, reaffirmed in a statement their view that inflation will continue to go lower in the next months. The BSP also noted an easing in local supply-side pressures, but noted possible volatility in global oil prices. An economics professor also said that inflation will likely further soften this year and fall within the BSP's target range by the first quarter.
Expected to be decelerating further. No? As a matter of fact, this quarter expected to be below 4% already. And by the third quarter, it will be below 3%. It's really, crude oil prices have been keeping the prices down, no? Even though itong Enero, nakita natin medyo tumaas yung food.
Abola said easing inflation will also provide the central bank with enough policy space to further unwind its tightening cycle.
It will give a chance for the BSP to actually ease the reserve requirements, the other number two, later on, the policy rates. So, medyo mapapagaan ang cost of doing business.
In a joint statement, the government's economic team said the January inflation provides an auspicious start for the year, especially in bringing inflation back to the 2 to 4% target range. Bim Santos, We Are One News.
Now, to further discuss this slower than expected January inflation figure, we have with us news correspondent Bim Santos. Bim, you mentioned inflation at a 10-month low this January, but that's the national picture. What does it look like on the regional level?
Well, yes, Robbie, it's pretty much the same story in every region. Headline inflation in each of the regions in the country was lower in January compared to December. In terms of rank, the autonomous region of Muslim Mindanao continued to have the highest inflation rate at 6.1% in January. That's compared to 7.5% in December. And the lowest also continues to be the Cordilleras. They posted a 3.1% inflation rate in January compared to a 3.5% in December. Of course, much of that has to do with the geography of those two regions.
Okay, you mentioned earlier a slowdown in some food inflation, non-alcoholic beverages, and so on. But in the coming months, we are expecting some effect on the second round of increases in fuel excise tax. What will that mean for projections for inflation?
Yes, so since the second round of fuel excise tax was implemented by about the middle of January, this was not reflected in full in the January rate. However, since most of the gasoline stations have started implementing the second round of tax hikes, this coincides at a time when global oil prices continues to be on a sustained downtrend. So at the most, this provides somewhat of a caution in terms of absorbing the impact of that fuel tax hikes. But also, even then, transportation per se in itself occupies just about 8% in terms of the CPI basket, which is about marginal compared to, if you compare that to food inflation, which is about 38%. So perhaps at the most, there could be some marginal effect going to the February inflation that we could see from this tax hikes.
Okay, and in the meantime, food inflation was a very high factor in 2018. That led to some proof of concept on the notion of introducing rice tariffication that will become law either if it's signed or if it lapses into law in the coming weeks. What impact will rice tariffication have, assuming that this becomes law?
The economic managers forecast that the rice tariffication measure will lower inflation by at most by about 0.4%. In terms of its impact in market prices, they say that it could cut prices of commercial rice by about 7 pesos per kilo. Of course, that's assuming, as you said, that it lapses into law or signed by the president. Even then, once it lapses, should it lapse into law by February 14, they still also have to iron out the implementing rules and regulations of this measure for us to feel its full effect.
Okay, Bim Santos, thank you for joining us on The Big Story.